It's time for Smart Charts, where we look at the timely topics with the street's top technicians. Abigail, I understand you're looking at global markets now.
You're absolutely right about that, Joe. Katie Stockton of Fairlead Strategies, the founder and managing director of Fairlead Strategies, joins me. Thanks so much, Katie, for joining. Always love your perspective. And you have a great chart here of the Hang Seng, because we have volatility not just here in the U.S., but everywhere.
Of course. So what we noticed just yesterday for the Hang Seng and Chinese equities in general is that they really broke out from a short-term consolidation phase. You can see that here above short-term resistance going back to early August. And the move was significant in that it was the biggest up day for the Hang Seng since November 2nd of 2018. And you can see the bar highlighted here in green. That bar shows a nice breakaway move for the Hang Seng, which at that time also looked somewhat challenged, as you can imagine. So we saw some underperformance, some downside momentum for China, and of course now it looks like it's recapturing some short-term momentum. This is starting to happen not just in China, but really around the world.
So do you expect this area of congestion then to break right up? Because it almost looks as though there is the possibility for an island reversal or something that could take you back above that 200-day moving average. So are you seeing that?
I think so. So I think we'll see follow through on back of that because we have seen the indicators turn as well with this, at least from a short-term perspective. The 200-day moving average not far above is not really a resistance level per se, but just a hurdle for it to clear. And sometimes when you see indices clear these types of hurdles, it does actually exacerbate the momentum behind the move.
Interesting. So maybe we will see some sort of continued violent up move for the Hang Seng.
That's right.
So let's bring it to the U.S. because everybody, of course, is talking about the range, the chop that we've had in August, and there it is. But this is a much longer-term chart, and there's lots of ranges.
I would point out, of course, here's the trading range we're talking about. Really, just over the past 3 to 4 weeks, we've seen the S&P 500 sandwiched between the 50-day moving average there in green and the 200-day moving average in yellow. The 200-day moving average can be considered a support area. I'm calling it around 2,800. And of course, the 50-day can then also be looked at as resistance on the chart. Of course, a breakout that's decisive above the 50-day moving average would be a bullish development for the S&P 500 short term. It also aligns well with that August 8th high, which would then complete the consolidation phase. So that's what we're looking for already here. Of course, we've seen momentum improve. In the bottom part of the chart, you see what's called a moving average based indicator, and that shows momentum having come into the market even as it's been sandwiched in that trading range.
So the bulls or buyers are trying to come in. So I have a question for you. So ranges are so interesting because not obviously, but it suggests that nobody knows in that range, that battle between the bulls and bears. And typically it's not the range, as you know, that's so important, but how it breaks. So if this one breaks the upside, it looks like it'll break right toward the all-time highs. But if to the downside, we could crack this year's low. So is it very important that this range breaks to the upside, and then would it go back down into the range of the year?
Well, definitely. The range itself does not give a sense of directional bias. It's really neutral, and it shows that tug of war between supply and demand. So we have to be really respectful of the breakout or, of course, the breakdown. If we did see the 200-day moving average broken, that would be a setback for the S&P 500. For me, the breaking point, though, is closer to 2765.
Okay.
And that is based on a Fibonacci retracement level, not to get too technical, but it's where, to me, the intermediate term uptrend would reverse. So a decisive move below that level would be a real breakdown. The consolidation phase or trading range that we're addressing right now is really short-term in nature.